Welcome everybody to this webinar sponsored by ID Insight. My name is Andres Porrado and I'm a manager in the financial inclusion team based out of the New Delhi office. We are very happy to have you join this webinar today. As some of you might know, this is the second webinar of our financial inclusion series. And I'm just gonna get started as people trickle into the webinar. So this webinar is really the culmination of a lot of the work that the financial inclusion team in India has been doing over the last 2.5 years. And yesterday's webinar talked a little bit more about digital payments and how to make sure that people in poor settings have access to these digital payments. Today, we're going to be talking about banking correspondents or banking agents. There are many names for them, and they're really the cash in, cash out agents in India. We're going to be referring to them as BCs throughout this presentation because that's how they're known in the Indian context. And just to talk a little bit about the structure of this presentation, we are going to start by giving a 20-minute presentation about some of the work that ID Insight has been conducting to try to understand how to improve the way that banking agents, business correspondents operate in India using a behavioral science approach that is based out of very low touch interventions. And after that, we're gonna have a panel of experts with different backgrounds, really sort of talking about from different perspectives, how do we improve the business correspondent model to ensure that people in poor settings have access to core banking services. So without further ado, let's get started. Let me first introduce all the panelists today. So we're very excited to have a group of experts who really represent a range of views in research, in the private sector. We have with us today two of the agent networks which we worked on these projects. So let me introduce everybody before we get started. So our first panelist will be Charity Troyer-Moore. Charity is the Director for South Asia Economics Research at Yale University's Macmillan Center, and she provides strategic direction and oversight for research, policy, and capacity building engagements in India and other countries in South Asia. She holds an MA in economics and a PhD in agricultural, environmental, and development economics from the Ohio State University. Welcome, Charity.
Hi, everyone. Glad to be here.
We're happy to have you. So up next is Sasidhar Tumuluri. Sasidhar is the CEO of Basic SubK, recently renamed SubK Impact. Sasidhar has over 2 decades of experience in financial inclusion, and he also serves as the board chair of the Business Correspondent Federation of India. He holds MPA from the Princeton University and a master's from the Indian Institute of Forest Management. Welcome, Sasidhar.
Hey everyone, good to be here.
Up next, we have Graham Wright. Graham is the founder and group managing director of MicroSafe Consulting. He pioneered much of the core market-led approach used by MicroSafe, and he has around 30 years of experience in emerging markets. He has worked with anything from MFIs, telecoms, and regulators in countries like Bangladesh, India, and several African countries like Kenya, Uganda, and South Africa. He has also collaborated in the initial design and testing of M-Pesa. So welcome, Graham.
Hi, thanks very much indeed. I'm obviously the oldest and therefore the one most likely to struggle with technology.
Great to have you with us today. We also have with us Seema Prem. Seema is the CEO of FIA Technology Services. She actually co-founded this organization in 2012, and she's responsible for innovation of social impactful products and services to serve underserved communities and markets. She holds an MBA from Xavier Labor Relations Institute in Jamshedpur, India, and a bachelor's degree in electronics and telecommunications from Kerala University. Seema is also a Sloan Fellow at the MIT Sloan School of Management. Welcome, Seema. Seema, I think you're mute.
Sorry. Hi, everybody. Yeah.
Great. Thanks for joining us today. And finally, we have a panel moderated by Jeremy Shapiro. Jeremy is the president of the Busara Center for Behavioral Economics. He is also a co-founder and was a director of Give Directly from 2009 to 2012. Jeremy obtained his PhD in economics at MIT, where he focused on research in development and behavioral economics. Welcome, Jeremy.
Thanks, good to be here.
Great, so after introducing this splendid panel, let us dive into some of the results from our work at ID Insight. So I should say right off the bat that we're gonna have this introduction to some of the work that we've been doing. Feel free to ask any questions that you may have through the Q&A feature of the Zoom webinar. My colleague Luke and I will be answering some of those questions as we present, and then later this Q&A will also serve to ask questions to the panelists. We're gonna leave around 15 minutes for the panelists and for Jeremy to moderate the answers to some of these questions at the end. And then if there's any question with respect to the work that we've been doing at ID Insight, we'll be answering those throughout the panel as well. So let me share my screen and start the presentation. So this is really about improving the business correspondent model to accelerate financial inclusion. And so business correspondents is the name of cash in, cash out agents in the Indian context. And they were created in 2006 by the Reserve Bank of India. And the idea is here that business correspondents are really intermediaries between people in poor and rural areas mostly, and the core banking services that people need to use. So these BCs open bank accounts, they also serve for withdrawals and for deposits. And they were set up as a cost-effective way to get people all over the country to really access these core financial products. It might be very difficult for a bank branch to be set up because of the high fixed costs incurred and because of the lower returns from some of these transactions. So the idea here is that BCs are really local entrepreneurs who worked in Kirana shops or in another venture, and they get extra income from their activities as BCs. And you can think of these BCs really as the frontline workers of financial inclusion. And as frontline workers, clearly they provide a very important service, but they also face a number of challenges. And you know, most of these people in this webinar might know that financial inclusion has improved by several indicators in India. Bank account ownership has significantly increased, but there are still some problems around usage and about taking up other products like insurance that might be beneficial for people in this context. And in terms of banking agents, this is a glass half full, half empty situation where, according to a report by Microsafe, in 2008, 45% of Indians were aware of an agent point within 5 kilometers. And so, you know, and from one perspective, that means that it's almost half of the people who have heard about this. But from another perspective, it looks like there is a lot of scope to improve that. There's, as I mentioned, a large gap between access and actual usage. And because these are frontline workers of financial inclusion, one first best solution might be something like increasing compensation. So this is something that has been talked about in the context of health providers in India or educators in India. But for a variety of regulatory reasons and logistical reasons, it might be very difficult to increase the compensation of banking agents. As I mentioned, the RBI never really intended for BCs to have the first source of income be this exercise. So really that sort of brings us to the question of, is there anything else that we can be doing to improve the way that these agents operate and improve the service delivery? And in our case, the ID Insight answer to that question has been to try to leverage research in behavioral sciences and behavioral economics to experiment with different approaches at scale of low touch solutions that can work in this context. And so we partnered with FIA Technologies, with SEMA, and with SubK and Sasidar to try different approaches to solve this, some of these questions. And so I'll be presenting a little bit about our work with FIA Technologies, and then I'll hand this over to Luke, who will walk us through our work with SubK. So with FIA, what we wanted to do was to test a SMS intervention to see if different behavioral framings actually increase the uptake of the PM schemes. So these are financial products created by the government of India that are really sort of pro-poor services. So we have the Pradhan Mantri, all the Pradhan Mantri suite of products, life insurance, accident insurance, core bank accounts without any fees. And so we partnered with FIA to test whether different framings of behavioral interventions could actually increase this. Now, for the people who are familiar with the behavioral literature, one thing that has been tried in different contexts is sending messages directly to customers. So we in turn turned the question to what happens when we send messages directly to the services providers. We did this with 3,120 agents across the country, and more than, we have a wide representation of districts and states, more than 23 states in 300 districts. And so the research design at a glance is the following. We sent WhatsApp communication to all the agents in one bank. So this is the same WhatsApp communication that basically had an incentive that was being run by FIA to increase the uptake of a pension product. So this WhatsApp communication was sent to all the agents that were affiliated with one bank. Now, we have a pure control group because the way that we investigate this question is by using an RCT. And so we have one group that we don't send any SMS communication. And then we have 3 groups that we send SMS communications that are around personal motivation, pro-sociality, and a threat of monitoring. So what we mean by personal motivation is something like be the best, right? Be the best that you can be, the best agent that you can be, and increase transactions. We talk about pro-sociality by saying help your village, enroll them in this pension product so that they can save for all age. And then the threat of monitoring, which has been proved effective in different contexts, is more around FIA and the bank are really closely monitoring your performance. And now another important question for SMS communication is the banking agent networks normally already communicate with their banking agents through this medium. But naturally you can wonder, what is the best frequency of these communications? Is it once a week, 3 times a week? You can think that if it's once a week, it might not work as well because people might forget, or if it's 3 times a week, people might get annoyed and then sort of that will lose the impact. So we really try in these 2 combinations of sending these messages once a week versus 3 times a week. And this in total gives us 6 treatment groups and then 1 pure control. So in terms of key results, we see that one of these framings in particular, being sent 3 times a week, actually leads to an increase of 13% in enrollments of APY. And APY is the Atal Pension Yojana, the pension product of the government of India. So as I said, it's really this 3 times a week framing that is driving the primary results. We also see what happens in different weeks. So we actually send these messages for a total of 5 weeks. And this coincided, as I mentioned, with an effort that FIA was running in order to increase pension enrollments. And so we see that this really works well on the 3rd and 4th weeks. And I should mention that the 3rd and 4th weeks coincided with the deadline by which this big push that FIA was doing. That was sort of like the deadline for enrollment. And beyond that deadline, agents would not be incentivized anymore in addition to their normal remuneration scheme. This personal motivation, we see some evidence that personal motivation increase enrollments in the 1st week, and this is sort of a story of people at the very beginning of this contest are very excited to log enrollments, and it's sort of like the New Year's, you're more optimistic about your goals than you might be later on in the year. That's one of our interpretations. And we find that spending 6.9 rupees on average leads to 1 extra enrollment. And so this is important to keep in mind, because part of what drives these interventions is the fact that sending SMS reminders is very cheap. But in the context of a product like APY, you really have to think about, okay, what is the extra remuneration that agents get and the banking agent networks get for any extra enrollments, to really think about whether this is cost effective or not. And the last thing I will say about this intervention before passing it off to Luke is that it's important to investigate the potential negative consequences of this. So we don't have a ton of data to substantiate what is happening with these enrollments, but one potential thing that could happen is that agents enroll people without providing full information. And obviously that's not all agents. But the point here is to just be careful about the potential negative spillovers. Unfortunately, we weren't able to collect any data on customer satisfaction, or whether customers actually follow through the process of paying these monthly installments that they have to in order to be enrolled in this pension. But one thing that we heard from some agents is that they might just enroll people without providing full information. So it's important to investigate these issues further before seeing whether this is definitely the way to go or not. So I'm going to stop here and hand this over to Luke to walk us through the project that we did with SubK.
Great, thank you so much, Andres, for that overview. I'll just share my screen here. All right, so in addition to working with FIA, we also worked with another large agent network in India called SubK Impact. And with SubK, we designed, prototyped, and evaluated an intervention to increase savings among BC customers. And the key issue here, as Andres was discussing, is an access usage gap. And in this case, a gap between bank account access and bank account usage, because BCs have many customers, but a good portion of those customers don't really use their account for saving. And so with that issue in mind, we had 3 key goals for this program. The first, we wanted to reduce behavioral barriers that might prevent people from saving in general or saving formally with BCs. Secondly, we wanted to try to increase the motivation to perform among BCs and their managers by increasing the sense of support and oversight process that they have. And then lastly, we wanted to try to improve the relationships between BCs and customers, and maybe even increase a sense of trust, because we did some qualitative research twice last year before we ran our program, and we found that some customers feel indifferent about the agent, or maybe even negative. And so we wanted to try to affect that as well, if possible. And so with these goals in mind, our program had 2 components. The first was the distribution of behaviorally informed household savings calendars to agents to provide to their customers. You can see the calendar here on the right. We based the design off of a previous study by Ideas 42 in the Philippines, as well as our own prototyping work in the study area. And then secondly, we held centralized trainings of agents across Andhra Pradesh and Telangana, the study area, where they obtained these calendars, where they learned about how to explain the calendars to their customers, where they engaged in discussions about how to encourage savings in general and formal savings. And then they learned about how to track the distribution of those calendars. So in addition to receiving the actual calendars, they also received a sheet with principles about encouraging saving and sheets to monitor the distribution of the calendars. And the idea of running these trainings was that SubK already runs trainings throughout the year. And so this would be ideally, in theory, a low touch way to change those trainings and potentially, as a result, change the relationships between agents and customers. And our research design, as in the last study, was based in a randomized control trial, which we conducted at the agent level. So we measured outcomes at the level of the agent, not through household surveys, with 800 agents across the states of Andhra Pradesh and Telangana, followed by some in-depth qualitative work on the phone, obviously, in April, since that was during the pandemic. It was during the lockdown. And one caveat to mention here is that our implementation was, on that note, interrupted by the pandemic. We had planned for the program to run from early February, right after the training, to the end of April, when we would measure final outcomes. But as some of you probably know, India's lockdown lockdown began in the middle of March. And so that did interrupt our program a bit, but we still think there are interesting results to share and discuss. So shifting to the results, we found that in the first 2 weeks of March, the program increased transactions, and we think that impact is primarily driven by withdrawals. So more specifically, the program increased transactions by about 13% in the first 2 weeks of March, which is about 46 transactions relative to the control average of 354. And as I said, we think this is primarily driven by withdrawals because in the month of March, the number of withdrawals increased by 11% as a result of the program, which is about 36 withdrawals relative to the control average of 326. And I'll also add that these results on the number of transactions and the number of withdrawals are consistent with the results on the value of transactions and the value of withdrawals. So we see basically the same impacts on the amount in rupees that was transacted or withdrawn in these time periods. However, in contrast to those findings, we don't see any evidence that the program had an impact on deposits, which was the main outcome variable, fund transfers, or other transactions. And so you're probably wondering, as we were at first, why the program would have impacted withdrawals but not deposits, which was the intended outcome. And our main hypothesis, and we're open to discussing this and really want to hear what maybe others think, and that's our main hypothesis is that as a result of the treatment, customers of agents who were treated were more likely to think of the agent, more likely to think positively of the agent, and more likely to consider transacting in general with the agent. But in this time period, perhaps leading up to the pandemic, leading up to the lockdown, those transactions were withdrawals. Because the impacts are pretty significant on withdrawals, and then we just don't see that impact on deposits. So that's our best hypothesis for that, and we're curious to see maybe what others think. And another interesting part of the context to mention here is that transactions and withdrawals across both states, across both the treatment and the control group, were declining in March. So when we say that the impact on transactions was 13%, that doesn't mean that there were more transactions in March compared to in the past. It could just mean that transactions were declining at a smaller rate than they were in the control group. All right, and then another set of factors to consider beyond the theory behind the program are factors related to implementation, because as Andres discussed at the beginning, the key here was implementing at scale, not conducting it in a small study context where we had high control over all actors. This was really meant to be an experiment at scale. And we found that in a lot of ways, implementation was strong. Almost all agents in the treatment group across both states received calendars. The only ones that didn't were the 2% who dropped from the study. And the majority, about 80%, actually made it to the in-person trainings that were held, the picture from that on the right. So that in terms of implementation quality at this stage, that was really strong. But one caveat to mention here is that the actual logistics of doing all of this at scale were not quite as light touch as we expected. The process of packaging and making sure that all the calendars could be easily transported on a bike, all of these nitty-gritty logistical questions became a little harder to answer than we expected. Nevertheless, we think that this part of implementation was strong. And then after agents received calendars, about 84% of them provided some monitoring data. So again, this was data that agents collected by hand, writing the names and phone numbers of people who received the calendars. And so 84% of them provided some data, and that data suggests that about 62% of the calendars, at least, were distributed before the lockdown began. And again, as I mentioned when discussing our research design, we do think that some of this was influenced by the lockdown. We spoke with some agents in our qualitative phone interviews, and they frequently mentioned that, well, I don't think I'm going to see anything because I just finished handing these calendars out and now everybody's trying to stay inside, or I haven't even finished distributing the calendars. And so all things considered, we were pretty satisfied with this level of implementation. And then also another interesting point to mention maybe is that we included in our training an emphasis on gender balance. We really wanted to make sure that these calendars didn't just go to the BCs who are largely male, to their male friends. And so we suggested that the agents provide 50% of their calendars to women. And that's exactly what we found in the monitoring data. And then also we wanted to try to encourage as much face-to-face in-depth conversation as possible about saving, et cetera. And we found that about 20% of the calendars were marked as distributed door-to-door. So of course, this is self-reported data, and it doesn't necessarily include all of the calendars that were distributed, but in terms of implementation quality, these are some other strong points. All right, now taking a step back and thinking about the key takeaways before we dive into the panel discussion. Starting with our work with FIA, we found that sending an SMS with threat or monitoring framing thrice weekly to agents increased enrollments in government pensions on average. And looking forward to other areas of research stemming from that, we think that future organizations could in the future focus on those issues of customer consent and also the duration of enrollments, because again, we couldn't measure the degree to which some of those issues were happening with customer consent. And then also, we don't have an idea of how long those enrollments are lasting, but those are really important to consider in terms of the actual impact, positive or negative, of this program. And then also maybe more research on the role of contests, because both the control group and the treatment group were part of this contest, right? It was a nudge in addition to both groups receiving a contest or being part of a contest. And so that might have played a role as well. And then shifting to our work with SubK, overall, we found that providing calendars and training to agents in Andhra Pradesh and Telangana did affect interactions between agents and customers. We think that is the most reasonable hypothesis, such that withdrawals increased before the pandemic, which did interrupt implementation. And then taking a step back further, looking across both studies, one overarching learning is that the BC ecosystem is, we found, really capable of experimenting with these kinds of intervention and doing these kinds of interventions, nudges, et cetera, and doing them at scale. So that we thought that was pretty interesting, and we were satisfied with that in terms of the learning. But as I mentioned when discussing implementation, what was low touch in theory really wasn't necessarily low touch in practice. The actual process of getting the calendars ready and then making sure they all went to the correct, agents and that they were all distributed was not intensive in terms of direct financial costs, but in terms of the time and thus the opportunity cost, that was greater than expected. And so we think that's important to consider for anyone doing financial inclusion research, because as you know, so many studies are done in a small context in which it's easy to control the degree of implementation, the quality of implementation. And so, yes, we think that speaks to how things change at scale. And then lastly, we think that we learned about the benefits of admin data, or have a further testament to the benefits of admin data, because using that data saved a significant amount of time and money. We didn't have to do any household surveys for any of these, for either of these studies. We think it increased data quality because we weren't relying on self-reported data, which could be subject to a variety of biases. And also, we think made our data made our conclusions more externally valid within the Indian context, at least, because we were able to do these studies across 2 states and across the whole country. Also think it ended up minimizing COVID-19 risks because we didn't have to visit households. And then lastly, we do think, we hope that these results make decisions about scale easier to make, because these organizations are already using admin data all the time to make decisions, right? And so the idea was that if we found a program that had not just a social impact, but a financial impact, then it would be a lot easier to talk about scaling that program than finding it solely at the individual level in one district, for example. Yeah, so that's about it. Andres, if you want to take it from here.
Great, thank you. Thank you, Luke. If we can just press one more to see the panelists. So thanks so much for that. And without further ado, I want to hand it off to Jeremy Shapiro. I just want to say that right now, this is an important time for business correspondents and banking agents, since after COVID, especially in relief packages, they have really come front and center of the relief effort. So I'm excited to hear this conversation, and I will leave it to Jeremy to steer the conversation forward.
Great. Thanks, Andres and Luke, for sharing those results. Before diving in, I just wanted to note that there is a Q&A session upcoming. We won't start it right now, so you'll have time to get your questions on those presentations up. I see there's already been a few questions posted, but anyone who does have questions about the presentations or the conversation beginning now, please do post those questions in the Q&A box, and we'll get to those in a few minutes. So, zooming out a bit from the details of RCTs, we wanted to put those in the broader context of the agent landscape. And to kick that off, we'll first invite all the panelists to give their take on a few broad topics. The first being, I guess, what everyone is thinking about and the reason we're all remote, which is how COVID may have impacted the BCN agent network. So in particular, there may have been some opportunities that emerged as a result. In government, for example, has used the agent network to distribute some relief payments, but also, of course, there's going to be a lot of challenges for agents stemming from the crisis. So we wanted to hear from all the panelists coming from very different perspectives, how they see the role of BCs in the COVID crisis, how they fared, and what are the opportunities and challenges there. Second question we're hoping to get some insight from the panelists on is the question that was addressed in different ways in each of these studies, which is how BCs and the agent network, so that's both, BCs could also be payments banks and other outlets, can help reach traditionally financially excluded populations. So what are some approaches to do that, whether at a general level or focused on particular populations that have been excluded? For example, how agents might be able to help close the gender gap. So just to kick off, we wanted to give the panelists a chance to weigh in on those two questions of how COVID has impacted agents and also how agents can really drive financial inclusion. So to kick that off, I was thinking we would start with someone who's close to the agent network. Seema, do you want to kick us off with your thoughts on that?
Yeah, so I think, so when the whole, the lockdown happened and the government announced the measures, the banking correspondents actually came forward very well. And they were the frontline warriors of providing essential banking services to the last mile, including underserved areas. So I don't think the government would have been able to distribute such large scale relief package without the help of the bank mitras, and especially in a very seamless and I would say minimal leakage manner. So I think the moment the money was transferred, the communication, of course, the government did an excellent job of communicating that yes, women beneficiaries and farmers and the elderly would be getting money in their accounts. Then it was just of ensuring that the agents remained functioning. So what we have seen is that pre-COVID days, about 75 to 80% of our agents are usually active on a daily basis, but now it went to as high as 95%. So I think that was phenomenal. The other thing that we saw was that we have a lot of agents in border areas, India-China border, India-Nepal, India-Pakistan border. So most of them tend to be a lot of agents in hilly areas and left-wing extremist districts. Most of them are not very active on a monthly basis, but this definitely ensured that the agents became active. They started engaging the local population, and so we saw so we see a lot more financial inclusion of the excluded population. So I think that was some of the biggest benefits. Now, rural ATMs, of course, don't work. Cash is vital for a rural economy. And so agents was the only choice. And they all remained active, so people were able to withdraw money. So I think those were the benefits that we saw for the agents. I mean, from from the banking correspondent channel. However, the disadvantages that we saw, I mean, the challenges that we saw was that the range of viable transactions came down. So largely it was around low ticket withdrawal transactions. So withdrawal transactions shot up. So average number of transactions for us actually went up. So we do about 200,000 transactions on a daily basis. That went up to about 250,000 transactions. But the agent income came down. And the cost of servicing, so for the agent, shot up dramatically, which meant that the income levels also came down. Now, some banks, of course, proactively provided some welfare incentives, however, not across all banks. And we work with about 40 banks in the country. So that led to a wide variance in the income levels of people. So I think it is very important that the government provides a welfare incentive for all business correspondents across all banks.
What was
So
driving that cost increase, out of curiosity? You said that the agent's costs shot up.
Yeah, so you have higher margin transactions and high value ticket transactions that happen, like a deposit for 10,000 rupees.
Okay.
So for a deposit for 10,000 rupees, typically an agent earns about 40 rupees. But in order to earn the same income, he'll have to do about 2,500 rupee withdrawals. Right, so so that was the biggest challenge. The range of viable transactions decreased on a daily basis, leading to a decline in the income.
Mm-hmm. Got it. What about that? Going beyond the current situation, you know, how do you see agents being able to further close some of the financial inclusion gaps in the future?
Yeah, so I think so far the banking correspondent industry was largely looking at the liability side, which is we were focusing on account opening and cash in, cash out transactions. But the COVID, the pandemic has actually brought a sense of urgency, right? And are forcing people to innovate and redesign the way they are operating. So now what we see is banks a lot more amenable and are implementing a lot more faster a wide range of products through the channel. So usually we would find the proactive good banks like State Bank of India and Allahabad Bank experimenting with various other products on the asset side. But now we see that almost all banks have decided that, yes, we're going to use the agent channel for meaningful financial inclusion. That is, we're going to use them for loan sourcing. We're going to use them for recoveries. We're going to use them for loan collections, digital collections. So we do see that, innovation, which would have happened in the next, I think, 36 months, actually getting done in these 3 months. So that is a very positive sign.
Okay. Yeah. So in a way, the crisis may have, with all costs, accelerated some of the need to digitize and push more advanced products through the channels. I see Graham is still hiding behind that microsave logo, so I thought I'd call him out and get him to weigh in on these topics also. And he's also on mute, promising his technological issues as predicted. Graham.
Yeah, exactly. So the microsave logo is a lot prettier than I am. That's why I did. I would echo a lot of what Seema has said. I think she did a great summary. I mean, before this event, let's not lose sight of the fact that agents in India were largely underutilized. So if you look at G2P payments and where people were cashing out their G2P payments, only about 1/5 of them went to agents. And we saw this both in research with the Center for Global Development that we did with them in both Rajasthan and Andhra Pradesh, including Krishna district, which is meant to be the most digitally advanced district in the whole of India. So only 1/5 of the cash out transactions were done at agents. That's pretty shocking, frankly speaking. Now, what this pandemic has done, I think, is people can't traipse into the market town where the bank branch is and where the ATM is, and so they have been using the agents and have overcome some of the trust issues that we sort of skated over in the earlier presentation. There are big trust issues around agents, not least of all because they are very often, they are local opinion leaders and they also very often run the local shop from which people take credit. So concerns around spreading of gossip about, financial transactions, or insistence on repaying some of the credit that I've taken from that shop as I cash out are both very real concerns. But there are other trust issues as well related to agents, not just in India, but worldwide. I think that they have played a tremendous role in responding to this crisis, and they're uniquely positioned to do so because of that local influencer role that they play. And the fact that that transaction, that cash out transaction, is actually a teachable moment as well. So you have the opportunity for agents to play a very important role informing the community about how to reduce transmission. And also, obviously, it's in the interests of the agents to do that effectively as well for their own safety. If they're, making 80 to 100 transactions a day, as some of our studies have suggested, then, obviously they're at high risk, and indeed they could become significant vectors if they are not, using optimal sanitization and social distancing and so on and so on. So I think that they've done a great job, and they're uniquely positioned to play that role. I only wish that, again, we said it earlier in this seminar, commissions, is an issue that we can't address. Well, I still think we damn well need to address it. The payments on government GDP payments in India is still way below the 3.14% that the Nilankani committee recommended, and we've done the math as well. And there is a very, very real need to increase the commission rates on the cash out by agents of government payments, particularly, as Seema says, when they are very small, as they currently are. And particularly when liquidity rebalancing is that much more difficult and required that much more often in a situation where maximum is cash out because of these payments that are being made by government. So as Seema said, several banks are doing the right thing. Some of them have made one-off payments for agents to buy masks and sanitizer. The Bank of Baroda is offering 100 rupees a day for liquidity rebalancing, but it's very patchy and it varies significantly from bank to bank. And actually, I would like to see the government get a grip on this. I would like to see them raise commissions. I would like to see them either insist that or support banks to give financial support to agents to improve their sanitation and because they are such important role models.
I promise we'll get into depth on the issues of commissions and agent viability as we proceed. I'll promise to make sure we return to that topic.
I've probably said enough already.
well, we'll crowd in some more voices then, Graham. Charity, how about from your perspective? What's your take on those topics?
Yeah, so I think with respect to COVID, I would agree with Seema and Graham, and I think they summarize well some of the, the important work that VCs are doing right now. I do have a little bit of data that I think kind of shows the perspective of others, the actual customers that are coming in at this point in time. So we're collecting, we meaning me and several other colleagues from Yale and then other universities, and we work with a team in India called EPOD India, based at Korea University. And we've been collecting data from returned migrants and have asked them about their experiences cashing out in the past week. And so looking at two different states, in one state, we saw that 77% of the ones that tried to cash out said that they were successful. So that meant, approximately 1 in 5 times that they're going to try to cash out with these government benefits, they're having trouble. And then in this other state, it was 15% that weren't successful. So it's, not the majority of people. The CSPs, banking correspondents, are doing a good job, but there are also issues. And I think, Graham hit on this as well, that there are liquidity issues that come up. So when we asked, why were you not successful? People noted long queues, waiting in line, cash was running out, and the CSP being closed. And I think that goes back to this liquidity and, trying to replenish, that sort of thing. So, the efforts that have had to been made related to COVID and cashing out during the lockdown are really heroic, but there are also challenges to that as well. One other comment just related to that is I think, there is a great opportunity for states, very poor states like the ones that we work in the North, that are absorbing a lot of return migrants. So just speaking with Bihar, who we're working with closely, they were talking about, now there's actually a lot of pressure in rural areas for the BCs to kind of ramp up activities, kind of as Seema was speaking to, but they're also thinking about how can we, build out our system even further. We've had this goal of putting, a banking correspondent in every single GP. How do we actually mobilize that now, given, all the pressure that's being put on the system?
Okay.
Yeah.
Will, is the pressure on the system, I guess I'm wondering if the expansion of the system might in fact exacerbate some of the pressures you're talking about in terms of liquidity management. Do you have thoughts on how to go about that expansion in such a way that that it's not creating more service points that in fact are not able to offer full service?
Yeah, no, that's a good question. I don't feel like I have full visibility on something like that. I'd be curious to hear from Sasida or Seema related to it. But, my take or my understanding is it was not an issue at bank branches when they're trying to go actually get cash. So hopefully that wouldn't put pressure on the system, but there might be more there than I realized.
Okay, great. Well, Sasidhar, there's a good topic for you. I'm going to throw in one more too, so you win the prize and get 4 questions rather than just 2. So one would be to pick up this idea of how to expand the agent network in such a way that that it's actually functional. The other piece I'll throw in there is to let you weigh in first on the financial sustainability for agents. So yes, there's lots of discussion about low commissions, and we know some data suggests as many as 30% of agents are unprofitable. At the same time, we do see over the years an expansion of the agent network and a lengthening of the tenure of agents, which suggests at least they're not going bankrupt in mass. So I'll throw that question in there too and let you weigh in on all of those topics.
Hey, am I audible?
You are.
Yeah. I think a lot of the challenges and the COVID time performances, I think Seema has covered really well, and I really don't have much to add there, but only 1 or 2 points that I would say is that, relating to what Graham was saying about the trust issues. And I would rather challenge now Graham to come back again to do the research on the trust area. And I would think that issue is probably to a large extent addressed, given what happened during the COVID period and what continues to happen. So Seema was mentioning that there were 95% of the agents operated during the time of stress, which proves the fact that these agents have basically stood by the need of the citizens. And that is where I think some of these times, some of these perception issues are taken care of. So we think in some ways, this crisis has helped this extended channel to really come to serve the need, and then people lined up. And if you have seen some of these photographs that are circulating around, how they managed to, even take care of all the precautions that you need to take to be taken while servicing these customers. And we haven't heard a lot of stress issues in terms of cash. In the beginning of the lockdown, we have heard of those that bank branches were not fully operational. They were not able to dispense cash to the agents when they needed. There were transportation issues because place was locked down, nobody was allowed to move around. So there were those logistical challenges that agents faced. But then as the banking became to be listed as an essential service and business correspondents were enlisted in the amendment that Ministry of Home Affairs has released later on, the things started easing out, and bank branches also started sort of servicing these agents more actively. So that way, if you see, for example, in the month of May, in our BC ecosystem of SubK, the month that is recorded the largest number of transactions we ever recorded in any month in our existence, which basically proves 2 points. One is what Seema is saying, that number of transactions have gone up, although the value of each transaction has come down, which is where the viability question comes in. But at the same time, it also has actually addressed a lot more people's needs than it would have otherwise addressed. So that way, the channel is becoming more and more accessible and useful, right? But then coming to your question of whether the larger network means larger stress to the channel and to the banking system, I rather would think it the other way around. If you see how some of the banks like State Bank of India have adopted the BC model, is basically they do it by a bank decongestion kind of an approach, which means that they want to send away a lot of people that are coming in for small transactions, and they are sort of directed to a neighborhood agent who is sort of less formal in his practice or her practice, and then the customer feels a lot more comfortable because the waiting periods are much lower and transaction is much simpler because they operate from a much easier devices and much less barriers and all that stuff. So banks basically reduce their stress by adding these points of transactions, and cash is managed also in a lot of ways, because these merchants who are doing banking transactions also have a primary business, which is receiving cash from customers. So if it is a grocer or a medical shop or anybody who is trading is also adding banking, so they are circulating, they're rotating their own cash. So although withdrawals are higher than deposits, the money they're receiving in their business is actually dispensed out. So it's a micro cash management that is happening at their own outlet level. So it's not really increasing the stress on the bank in that sense. So I really don't believe that's the issue. The larger network, the better it is. The banks become much more released to serve the prime customers and let the small transactions go out of the bank branches.
Okay.
So yeah, there's some addressing the financial inclusion challenges. Like for example, a woman customer. How do you include more women into the ecosystem? We have done one small experiment. I would not say experiment, but one small intervention in Bihar with a self-help group channel, where most of the women members were converted into BCs, bank Sakhis they call. Mm-hmm. And if we see a corresponding agent, which is an open market versus a bank Sakhi, the transactions are more than double in that network.
Okay.
Because she was able to service the SHG members that are a captive customer base. And this customer base is very, very large, which is not yet fully served with the banking network or BC network. So I think there are ways that, if you enroll more and more women BCs, preferential sort of pricing or some kind of product differentiation, or include SHG members into this network, I think there are ways that you can get more and more deeper into the communities and serve the unserved a lot better. And BCs can do that because there is flexibility in that model.
Actually, maybe I'll just ping pong back to Charity. I was thinking about a question related to some of your work on this. Sasidhar mentioned, having female BCs seems to be a fairly viable way to include more female customers. There have been a variety of noted frictions to getting women to take up the BC business. I know in some of your own work, you've done experiments where you have somewhat, I might say, somewhat powerful interventions. For example, having government intervene to shift payments directly to a woman's account versus to a head of household account, for example. So I'm curious your take on whether that sort of very heavy-handed, if you will, intervention is going to be needed to enable more female BCs, or some other approaches that might help close the gender gap with respect to financial services, or if you have thoughts or hope for more subtle approaches that might be workable?
Yeah, so I'm an economist, so I shouldn't respond with an anecdote, but I will. I think colleagues and I started working in northern Madhya Pradesh in 2013, and at that point in time, women's engagement with the BC system was very low. And the type of intervention that we ran, which is exactly what you're describing, we worked with the government, one, to open bank accounts for women, two, to actually direct funds for workfare payments for days that women had worked into their own bank accounts. And then three, to provide this group-based financial training for these women that was very heavy-handed. And on top of that, we actually ran something for everyone when we opened bank accounts, and that was we had the women come to the bank or to the banking correspondent, we called it the CSP, the kiosk, and we actually conducted a transaction with them. We gave them 100 rupees, or I think maybe 50 rupees, and we said, we walked them through the whole process of here's how you actually deposit the money, and now you can decide to pull out some of the money. And that, I think, was very important for them to have confidence, to be able to engage, and to feel like they could go back to the BC. Fast forward 5 years, or maybe 4 years, we went to Bihar, and we said, oh boy, Bihar is going to be much, like women are just going to be much more reticent than they even were an MP. This is going to be a very difficult situation. And I was very pleasantly surprised. I think, at that point in time, by 2017 or 18, bank account ownership in Bihar for women was on par then of women in Maharashtra and Andhra, these states where you would have expected bank account ownership to be higher. And we started doing qualitative work related to women engaging with banks. We actually were quite surprised because we found that the idea that a woman could and should be able to use a banking kiosk had actually been normalized and in some ways feminized. It was now viewed as this, like it was a woman's role to take care of these small transactions, and she could do that at a local kiosk. She wasn't going to the actual, link branch for anything, and I think that's very intimidating for her. But we found, many women, even though there are still these barriers related to literacy and so on that are correlated with gender status that make it more difficult to engage at a BC, but we found women doing that, and it really it was a pleasant surprise. So I think yes, some of these heavy-handed things are important. I think actually making sure that women have a reason to transact is always going to be important to encourage them to engage, and these government GDP, DBT payments are really important for that. But otherwise, we really have seen kind of a shift in equilibrium just by, having these CSPs kind of penetrate all over the country. And I think it's quite remarkable to see what's happened in Bihar.
Great. It's a good anecdote. Thank you. Let me invite Seema and Graham to weigh in on this topic. I'd like to stick with it for a little bit. Also, just to throw a little spin on it, would love to hear thoughts more on ways to accelerate a greater representation of female agents, but also I'm curious if there are other perspectives on approaches that can close the gender gap in financial inclusion. One possible avenue is, will mobile agents actually do that if they're reaching the home? So open that up to the rest of you guys if you have thoughts on closing the inclusion gender gap, whether that's through agents or other avenues.
Yeah. So I just like to add a few points here. So going back to Charity's point around normalizing, the banking activity and women actually being seen as providing low ticket transactions. So what we saw was that if we appoint women as banking agents, then more women tend to get included. And also there is a lot more inclusion, like the elderly, school children, even the minority community tend to get more included with women as a banking agent. Initially we faced a lot of resistance. So what we did was we would open the center in the spouse's name or the father's name, and then have women actually work in the center, either the daughter or the wife. So it was also very important. We realized that in order to increase inclusion, we had to get the men to engage very well. So once we got the men's participation, right, and they were on board with women either opening bank accounts or working as a banking agent, we found that the women were more successful. Accounts were remained active for a longer period of time. And over a period of time, the normalization happened. That is, people were more comfortable with women having bank accounts and women running these centers, especially in some very patriarchal places like UP, Bihar, and so on. The other thing what we realize is that also on the demand side, you need to design products specifically keeping women in mind. We didn't see a lot of it. I can give you an example where we recently started working with a private sector bank on their loan origination process. And so some of their criteria was that the woman has to be married and she has to have property in her name, right? In her, where she's currently staying. So then I looked at the criteria and said, I myself am excluded from, getting a loan from this bank. So I think the credit department at the bank actually needs to go through some gender sensitization training, right? To create some gender balance policies, because why would you not allow single women to actually get loans? So when we had sourced around 100 women for micro loans, 50 or, because of these criteria, 50% of them we had to reject. And the bank was not willing to change the policy. So very critical that right at the product design, we should not consider women as a homogeneous block, right? Similar to men. So whatever you're offering the men, just transplant it to women as well. No, it doesn't work. So we need to come with products very specifically designed for women. And I think you would have much, much better offtake there.
Yeah, it's a really good point. And it relates to another topic that I think is interesting, which is beyond the issue of simple financial viability and survival for agents. What's going to make them vibrant and an active, thriving business and including people? And certainly, closing the gender gap itself is an avenue. That's new customers. Also, enriching the product ecosystem, whether that's products that are a better fit for women customers' needs or other types of products as well, can contribute to that. Graham, I'd love to get your take on that. The business, what's necessary to make the system a bit more vibrant from an economic perspective beyond pure survival. And let me throw in one subtopic, which is payments banks as well, which are not able to engage to the same extent in the product ecosystem. So I'm curious, as a sub-theme, if you can get to it in your answer, how you see the payments banks network fitting with the BC network. Are they complements? Are they in competition? And how can we make both of those vibrant? And you're back on mute.
I said, wow, a triple-barreled question.
Making it easy for you, Graham.
Say it?
Making it easy for you. Right.
Yeah, right. So let me just go back and reassure Shashi that I'm absolutely convinced that this whole crisis will have elevated the standing of agents and the trust in agents very significantly. And I think we should be using this crisis in whatever way we can to enhance that still further. And indeed, I would also agree with the discussion around women agents and their importance and their ability to facilitate the engagement of women in the financial inclusion process. And we know that a very significant proportion of the women that have PMJDY accounts either don't use them at all or use them very intermittently, and quite often only when accompanied by a male relative who does most of the transaction work anyway. So we need to be a little bit careful about some of this. Amit Arora did some very interesting work when he was at GIZ and now at World Bank around the bank SACIs and trying to get SHG leaders as banking agents. I think it's been difficult, but I think there are, you know, significant advances in the understanding, and I think this is something that we can build on and develop still further. And it sounds like Shashi's already begun to do that, which is great. Women agents are, we've written a series of blogs on these because women agents are very, very often more trusted, particularly by other women, but above all, more patient. So they will tolerate the questioning that low literacy and low digital capability people will have around these things, whereas male agents just want to get on to the next transaction and you know, and therefore don't have that same level of patience and tolerance. So I think it's really important. When we did the last agent network assessment study in Asia, in India in 2017, only 8% women, of agents were women, and that's got to change if we're going to see significant financial inclusion of women. And I think, you know, when you talk to the providers, they're concerned that it'll take more to train the women, and they'll struggle to travel to rebalance with liquidity and so on and so on. So there are 101 concerns, most of which in my estimation are tractable, and they overlook consistently the advantages of women agents, which are that the churn amongst women agents is significantly lower. And also for women agents, very, very often this is a marginal revenue stream for the household that is, you know, important, but is not essential. And therefore they're willing to tolerate a lower level of transactions and thus commission, whereas many male agents won't tolerate that and will simply cease to be agents because they're not driving, getting the revenue that they want. So I really hope that India will make significant efforts to enhance the training uptake and support for women agents moving forward. I think it could indeed be a game changer. Now, part of your triple barrel question was payment banks, and yes, of course, they are in some respects different to the mainstream, you know, those servicing the mainstream commercial banks. But I would make the observation that payment banks are enabled to build the relationships with, for example, credit providers in order to advance credit as well. So it's not actually terribly difficult to, I don't think that many have done it, but it's not as difficult as it could be. But we have to remember the vast majority of payments banks, with one important exception that I'll come to, are still largely urban focused and urban based. Airtel Payments Bank has rural agents of varying levels of activity, but of course the big new kid on the block, so to speak, old new kid on the block is the India Post Payments Banks, and they can actually offer fixed deposits as well, which other, because of the relationship with India Post, which other payment banks can't. So they have some advantages and really significant outreach. I think, though, what's missing in that question, if I'm allowed to suggest something that's missing, is that there is this sort of new generation of transaction agents that use particularly AEPS, like Pay Nearby and so on, who are very much focused, are typically nominally affiliated with the smaller banks, RBL and Yes Bank and so on, but do enormous numbers of off-us transactions in order to particularly process government payments and remittances, but increasingly they are broadening the range of transactions that they offer to include, bill payments and so on. I think that's an area to watch, and we'll have to see how they survive as the sort of push of G2P, on the one hand, decreases coming out of COVID, but on the other hand, we know that the government of India, indeed we're working with the government of India to help them make, for example, a growing number of subsidies, including the fertilizer subsidy, for example, a cash-based subsidy rather than a more kind subsidy or biometrically authenticated physical uptake approval. So, as always in India, fascinating times, but I think this crisis could well prove to be an inflection point, particularly around the trust in and role of agents, which will be fantastic.
I'm curious to hear from others too about what are the long-term impacts, whether that's with respect to trust, whether it's, Seema and Sasidhar, you've mentioned that you've seen huge increases in transactions. If those are new customers, are they likely to stay engaged with the system? I'm curious to hear what you think the future looks like, perhaps drawing from perspectives from demonetization, if that's a useful reference where you had a big shock. What of these changes are going to stick, and or is there anything needed from a policy or agent perspective to try and ensure that some of the positive changes do stick?
Yeah, so I think the time has come when the channel is now recognized as one of the integral part of the banking system. So far, it was a little disconnected from the mainstream banking. It was relegated to rural or sort of a specific kind of a transaction like remittances. Now this is becoming a lot more pervasive, right? And as we speak, government, when it started the relief programs, one of the important programs that they started was street vendor financing, right? They want to bring back all the street vendors back into business, and there is this new scheme that was launched to give loans to them, about 10,000 rupees per vendor. And in that whole discussion, BCs have actually come to be in the center of that discussion, because now they realize that, 10,000 rupee loan, no bank will go out and give this kind of small ticket loans, and you need a distribution system. And now that is possible only if you use a feet on street model, because these street vendors are not going to click buttons and get loans, right? So BC network now is working very, very closely with the Urban Ministry and SIDBI as we speak to make this work, as long as the bank partners are ready to integrate into that. So as you go forward, I believe that as agents get engaged with multiple banking services, so far it is primarily cash in, cash out, or money transfer on one side, or microfinance on the other side. Microfinance is more mobile agents, and cash in, cash out is more fixed point agents. So it's a little bit dichotomous business models that are running. Now the time has come to integrate the two and make fixed point agents useful for things like loan collections, loan sourcing, insurance distribution, small saving products. Even savings products are not distributed through liability network. It's only cash in and cash out in most cases. So now that there is this trust aspect, more also from banking industry, which was also lacking to some extent. They do this because government pushed them. But now people see the value that this network can offer to them by releasing their stress. So I think the longevity will come from the fact that these agents will start cross-selling more financial products. They are given then commissions on those products. So viability challenge also gets addressed. The challenge of viability is because of the mono-product nature of the channel. It's only transactions. How much can a bank really pay? Well, they could, but still, they're hesitant. Now, if you have an income-generating product that comes on the top of this network, which primarily is a loan, banks are a little bit more willing to share because they're earning from that channel than a regular transaction. So we think that this is a very good time for the network in Business Correspondents Federation of India, as I lead it, and Seema is a part of that network as well. we are pitching very, very strongly to the banking industry and to the regulator and the government to see this channel as a formidable last mile distribution network. We would like to call it a first mile distribution network rather, where a lot of them are now beginning to trust. They are already using this for transactional nature of business. Now, why not we look at it from a product perspective, from a demand perspective? So I think that is going to change and will make it work. At least if not the whole network, some part of the network will start maturing to offer multiple products, in my view.
Any other thoughts on that from you all? And also I wanted to get to some audience questions too. So I'll give you all a chance to get in any last thoughts on these topics before shifting gears a bit and getting the audience questions answered. Also, to everyone listening, now's your chance. Get your question in now if you want it answered.
I'll just add and then maybe pose a question also to Sasidhar and Seema. I mean, I'm curious, so this is a great opportunity for BCs in some ways, but I think, you know, we know we're headed into a recession. We're already in a recession in India, right? And I think the next few months are going to be very indicative of what happens, I think, over the next few years. So in the end, a lot of time, you know, the issue with cashing out is, you know, there are low margins on that, but you know, do we really expect people to be depositing, you know, lots of money soon, or do you really expect to be able to mobilize these loans from the BCs very soon? I mean, we've, you know, with the very vulnerable populations that we're working with, 30% right now are getting by on loans, and they're probably borrowing from money lenders, so they're going to have very little money to then put into a BC. So I'm kind of curious to hear your thoughts on, you know, there's this opportunity, but there's also a large challenge ahead related to the economy. So how do you see BCs kind of reacting to that, or able to take that and, you know, make something good of it?
Yeah, so Charity, yeah, so to answer your question, I personally see a very long road to economic recovery. I don't think people have money right now. They are depending upon the government subsidies, right? It would be a long time before the MSME activity gets, you know, gets back to normal ways of functioning. But even then, so the government has done a lot on the monetary side. However, on the fiscal side, there's not been a lot done to generate demand. So yes, the banks are doing all of this great stuff, and we are giving loans to MSME, street vendors, etc. But if there are no walk-in customers to buy their products, then there is no income, and they are just going to end up defaulting on loans. So I do see a banking crisis also possible. I'm not sure. I mean, these are just my personal views, and it is quite worrisome at the moment. Yeah, but what Shashi was alluding to, you know, that banks have now reacted with a sense of urgency. So you are integrating the credit BC and the banking BC on the liability side. So we see the BC becoming more important, and we see the BCs actually becoming more viable, because besides low ticket transaction, low margin products, they are also able to sell high margin loan products. So we do see the channel becoming more sustainable, more viable, banks supporting them for a lot more distribution of products on the asset side. So long term, the overall outlook for the BC industry is good. On the economic side, not really. Sorry.
So just to add one point, I think whenever we talk about a BC discussion, we typically only focus on a fixed point agent network. But in India, banks have been very smart about using this whole concept of BC in also distributing microloans. Today, 10% of microfinance industry is served by BC network, which is not a fixed point outlet. These are mobile agents. They behave just like loan officers of MFIs, but they represent banks. So already BC network serves substantial amount of credit demand. Only thing that is not yet fully explored is both together. So a fixed point agent acting as an access point for generating the demand for loans and collecting, while a mobile agent acting as a more processor of loan applications and doing underwriting of those loans. perhaps financial education aspect of it. I think that is the dichotomy. Otherwise, financial services on micro segment, both are being addressed, more growing. Banks are using more and more BC channel, but some banks use it for liabilities, some banks use it for assets. Now, we are yet to see a bank that uses BC network for both liabilities and assets in equal measure. That's the success point which we are waiting for, and that's not too far away in my opinion. Great. And I'm not going to predict on economy, by the way. It's hard to do that at the moment.
You'll leave that perilous task to charity, huh? Great. Well, why don't I fulfill my promise to make sure the audience does get its questions answered, but all of you, of course, feel free to return to any outstanding topics from the discussion that are out there. Let me start with one for Charity. The question is, with feminization of banking roles, where tiny tasks like depositing and withdrawing small amounts of money helps in improving the agency of women, at the same time, does it anchor households to think of women as being able to only handle smaller transactions, while more important transactions remain the responsibility of the male head of households?
Well, that's exactly what we've seen, right? I think, this is what I was trying to say, I think, a bit earlier. So, but I think, I'm an eternal optimist. So, challenges also present opportunities. So I think, this is one step forward, right? To women being able to have some control of finances and be able to have more of a say in their household. So I think, we can leverage these moments and hopefully build on them so that it, helps women gain confidence, gain an understanding, build their financial literacy. All those are very important things because we know that there are barriers to them doing more financially. So I think, there are problems with it, but, we can take from that and hopefully, push in the direction that we hope things go.
I'm also, hopeful that some of the dynamics Seema and Sasidhar have talked about in terms of agents starting to play a broader role in credit and other products that may, if you already have the network, that's the natural person to take over those activities. Question for you, Sasidhar, and Seema, I think also you can weigh in on this. You mentioned banks and government working with agents, but are you seeing any of the fintechs looking at the agent network as a distribution channel for their products?
Yes, I think we ourselves have started tying up with some fintechs. There are some difficulties in completing the loop in some sense because of the nature of the business that fintech runs versus high feet on the street model that VCs run with of course a decent technology backbone. But going, I mean, there are some experiments to begin with, but going forward, I think the ecosystem model is going to be more prevalent. Distribution channels are necessary. Feet on the street is not going to go anywhere for a while because of the customer segment we're talking about. And whether it is a bank or a fintech that is integrating into a bank or independently operating as an NBFC, looking for a touch point that requires to generate demand or to close a loan or service a loan, I think BCs are natural choice. Otherwise, they will have to go and set up their own network, which is going to be costly and not really using the efficiencies that an existing network would already bring. So we see that synergy going forward. Some early work is already going on, and more of that is possible. Either BCs transitioning themselves into more fintechs integrating into BCs, or bank BC fintech becoming a full pipe. I think all that possibilities are there to see, in my view.
Great. Seema, anything to add to that? Or I can throw you another question if you're ready for one.
Yeah, I think Shashi has articulated it very well. So yeah, please carry on.
There's also some questions about, I'll give you two that are somewhat related, about the nuts and bolts of how agents have been faring lately. So specifically, a question around how specifically agents have managed liquidity during the COVID pandemic. I know we've touched on that a little bit, but if you have anything to add on the nuts and bolts. and also how companies have been able to deal or can deal or need to deal with fraud happening around cash in and cash out activities.
Yeah, so I think I'll answer the second question first. So initially when we started the lockdown, we started very early on, and we have a great risk team in place. So one of the areas that we identified was fraud, increase in fraud, because we do have an automated AI solution for auditing our agents. And but it was a combination of extensive field visits by our auditors, followed by inputting the information in the audit app and the analysis being done remotely by the data science team. So we realized that as we increase the number of audits, our number of frauds also came down. The percentage of frauds came down. So suddenly we were in a situation where we were actually going to lose out that physical field connect with our agents, and we realized early on that we would have to prepare for that. So I think it was a combination of data science where we analyzed a lot of data, real-time data on transactions to identify patterns like round tripping, accommodative transactions, like splitting of transactions, round tripping, and overcharging. So all of these patterns you can actually detect for, sitting remotely by the data science team, and then extensive calling to the agents and using imaging technology in order to figure out possible frauds which can happen at the agents. So we are still in the development a lot of the imaging side, since the field connect is completely out. But I think that has helped. The extensive analysis, use of pattern detection, and imaging has helped identify detect threats early on, and we were able to contain frauds significantly. Yeah.
Great.
And what was the first question? Sorry.
First question was just if you had any additional detail on how agents had been able to manage liquidity during the crisis.
Yeah, see, we left it to the local departments, local administration. So initially we did see a lot of liquidity problems. We also had to maintain social distancing at the agent's end. So what we said is we would go by the local administration, whatever the local administration says. And we asked the agents to kind of spread out the cash handling over a period of days so that you kind of ensure that the agents are safe. That was one thing that we did. Second, what we did is we looked at the data, the past data, analyzed the cash requirements, the cash transactions patterns, and then we proactively informed the branches to keep the cash ready, right? So extensive, I think I saw public-private partnership at its best between the bank branches, between the agents, between the BC company, corporate BCs, and between the local administration. So I think, so remarkably, this coordination happened so well that we were able to get over the liquidity problems to a large extent. So Charity was mentioning about cash running out. So initial days, yes, we did see a lot of cash, CSPs calling us up and saying, yes, we have cash problems at our centers. Coordinating with the bank ensured that, the cash situation was solved. Okay. So a lot of proactive follow-up coordination, and that helped solve the liquidity problem to a large extent.
Okay, great, thanks. There are still some other good questions out there, but unfortunately we are running out of time, so maybe I'll leave it to Andres to suggest follow-up for that. But I just wanted to say thanks to all of you. It was great chatting with you. I think some great thoughts, particularly thinking about how the unfortunate current situation could actually lead to some progress, both with respect to the overall vibrancy of the agent network, as well as with respect to closing some of the gaps with respect to underserved populations. So thanks very much, and I'll pass it back to Andres to close us out.
Thank you so much, Jeremy. And also thank you so much to all the panelists for joining us today. This was a great conversation, and we really hope that this is the beginning of some concrete ideas to improve not only the agent network, but also delivery of financial inclusion products. My team will be posting a recording of this conversation online, so stay tuned for that. and stay tuned for more follow-ups on the work that we did with FIA and with SubK. So once again, thank you so much and have a good day.
Okay, thanks.
Thank you.
Thanks, everyone.
Thank you.
Thank you very much.